Good morning, good afternoon, and good evening from wherever you are watching our YouTube channel. This morning we will be talking about CADCHF. CADCHF was our trade of the week last week. So this week it has given us more opportunity. So it's still going to continue to be our trade of the week going into next week because it is following our projections. So we shall begin with the top-down analysis like we always do. So we start with the monthly. So let's quickly start from the monthly. If you look at our last video, we identify some areas, we identify some zones which we can call the supply and demand zone or the support and resistance. This area, we drop the link to be able to see it. We say price, it's possible that price may want to be consolidated or rather ranging in this area, which we say we can take we can enjoy a lot of opportunity in this area. Price may keep bouncing within this area, but with the way the crude oil price is going, we may see a breakout. Maybe this year, maybe next year, we don't know, but we may see a breakout. And when we see a breakout, it may be a very long one. So it's possible that CADCHF is planning a total turnaround. Or another scenario you may be looking at is maybe something that is just happening as we are talking, maybe going into next week, we just see, or next month rather, or the few months, you just see a quick breakout, retest, then boom, price may shoot out of the range. So could be any of this scenario. So that's what we are referring to. Then on the weekly, so let's clear this. Let's quickly clear this. Okay. So we quickly go to the weekly. On the weekly, we also identify an area of resistance, which you see we may see a reaction if price can get to that particular area. So we identify this area. You go and watch our last video of trade of the week. Last video. So we identify this area that price may get to this area, and once it has gone to this area, it's either it drops down back or give us a lower low, or it gives us a break and retest like we've identified on the monthly. So maybe going to next a few weeks coming, you may see this. You see a breakout. So this is the scenario on the weekly. So on the daily, this is where it gets more interesting. The last time we discussed, okay, let's clear this. Last time we discussed, we were able to identify this bullish structure, which is called pop and undo. Pop and undo, which is forming nicely. So we form the cup. Now we are expecting that going forward the undo will form, which is what we may likely see in the coming months, or in few weeks time. So we're already seeing a signal of the drop, or are taking advantage of that already. So going forward, we may see an undo forming. Pardon my drawing. Let me see if I can draw it properly now. Okay, let's draw it up. Okay, let's follow the shape, because it's already known as a shape. So we got the cup. Now we are forming an undo. So this is what we're expecting going forward. So aside this pop and undo, also identify a resistance, or we may also call it a supply zone. Identify this area. Identify these areas to say may end up being a supply area or supply zone, whichever I want to call it, still okay. So this area, we actually identify this supply zone, and we expect a reaction from this zone, and we're already getting this reaction. So when price got to this zone, you see the reaction. See this kind of candlestick pattern formation is called bullish engulfing. You can see how this previous candle was engulfed by the following two candles. These two candles are candles from Thursdays and Friday. So, and this is also coming from the back of the retracement, or will I say pullback from the crude oil also, and also the dovish news, or yes, dovish news from the Bank of Canada, which is the GDP, the slowdown in the Canadian GDP. This is a result of that. That's why we are getting this reaction. So if we can quickly check the calendar to see what we're actually talking about. So while it's load, let's quickly look at our targets. What are which area are we targeting for this pullback? So we are using the Fibonacci retracement tool or indicator to identify the area. So we pick it from the previous daily low or swing low, whichever. So we identify two areas, 0.5 and 0.618. So 0.618 is close to an area of support, yes, where we took our first entry. So we may identify that area as what our second, that will be our second TP if possible. Then our first TP will be the 0.5, which is aligned with this area. 0.5, yes. This area. So those are the targets you'll be looking forward to go into next week. So we are expecting the handle to start forming, the bottom to start shaping up at this area. This is what I mean. Let me see if I can draw it. So once the price comes down from this area, we're expecting reaction that we want to see an handle, something like this. So the price goes up. Maybe this is the time we will be expecting the $100, or it may go more down below to this area of support where we took our first trade. So whichever area we start turning around, those are the areas we'll be looking at. Now let's see the data we are trying to look up to. So that is our target, and that is the direction, and those are our targets. So how did were we able to take advantage of this direction? So we actually waited for the news, the card news on Friday. Don't forget, we took our third trade last week Friday, yes. So which we closed out. So at the end of the day, going forward, for us to take advantage of this direction, what we normally do is we go down to the lower time frame, that is 4 hours or the 1 hour time frame. Those are the areas we normally take our trade, take our entry. So first of all, we identify two chart pattern formation. One is what's called head and shoulder. The head and shoulder chart pattern. So let me quickly show you that. Let me okay, head and shoulder. Head and shoulder. This is the left shoulder, the head, and the right shoulder. So I get into the next leg. So this is what we identify. So as soon as price drop down to this area, which is the neckline, as soon as price go to this area, so prior to the news, we waited to see a pullback, which the market actually gave us. And if we got the pullback, this is the area we are looking at. So the price got to this area, we are expecting a reaction. We may either see a breakout, it may either be a breakout if the news came out hawkish, GDP of Bank of Canada came out hawkish, we may see a breakout, retest, then we'll continue with the buys. But what we see, we later saw it came dovish. So what we now did was wait for a while to see reaction. Maybe we see a close of this candle and it was a dovish news, or yes, a dovish news. We took the trade from them, and this is where we are currently at. So our target going forward is to where we identify on the weekly. On the daily. Those two areas that the handle will start from, that's where we are targeting. So the target 1 and target 2, we may reach our target going to next week. Yes, going to next week. I don't know if so this is going to next week. These are the economic data and news going to next week. So what we are interested in particularly is the news for the Canadian dollar, which is the reason why we saw a pullback. One of the major reasons why there was a pullback. So okay, sorry, this is the news. So if we look at the Canadian, came out on Friday, September 29th, yesterday, 1:30 p.m. The CAD, GDP month on month, you see the red shows that it is a dovish news. So it came out 0.0, lesser than the expected 0.1%, although better than the previous -0.2%. So this is the reason why we saw a pullback. This is the reason why we saw a pullback. This is the reason why we saw a this move down. The move started from here. The move started from here. This area, this green candle. That's red because it's a bearish move. Yes, bearish move. Right? So now let's quickly look at the COT reports. Let's see what the current COT report is talking about. Because that's one of our major confluence factors. Tells us whether to take a trade or not. Let's look at the Canadian dollar vis-a-vis the Swiss franc, the CADCHF. So if we look at the Canadian dollar on our table, sorry, it's loading. You can see. If you look at it from our table. Okay, thank you. It has loaded now. So what we identify is that it is still net short. Canadian dollar is net short. But one thing we can identify is they are also taking profit. The big institutions are taking profit. They are neither adding long or adding short. What they are doing is they are closing their positions on the Canadian dollar. Well, I'm not surprised because we are already in the end of the month, so this kind of things happen. This is the time that traders close out positions, try to rebalance their account. They call portfolio rebalancing. So they also take profits. So I think that's what we are seeing. But you can clearly see that this profit taking, according to the last report, shows that they are taking more profits from the short position than the long position. So it's showing that gradually net position is shifting to the long side. You can see the significant change from the last week report, which we are actually expecting, from 48k to 32k. That's significant enough. So as soon as we start seeing addition of long and closing of more position of short, so Canadian dollar should shoot to the upside. Yes. So if we look at the CADCHF record, before we go to that, let's see other ways of reading the COT report. We also have what's called a chart. Yes. We also have a trend line chart. So this trend line chart also gives us a pictorial evidence of what we are talking about. You can easily see from the chart that Canadian dollar is net short. It is the negative area here. You see the change in direction showing us a move up. So showing you that possibly there may be a change going forward. So it may end up moving upward and out of the negative position. So another thing we can look at, sorry about that. Another thing we can look at is this chart also, which shows us week by week how the progress is going. You can see UX index, I think is one of the highest this week, followed by the US oil. The US oil price has been going up, so I'm not surprised that the big institutions are moving their long position to the US oil. So what we are interested in today is the CAD and CADCHF. You can see the CAD is still net short. You can see we have over 74.4% or 74.5% of CAD position still on short, and 25.5% of the CAD position is still on long. So we are expecting dramatic change going forward. So CADCHF equally is on net short, but far more better now than the Canadian dollar. So you can quickly check the table also for the CADCHF. You see how it's doing when compared. So sorry, it's loading. You can see the sign that is loading already. Yes. Okay, so if you look closely, you see that here in the CADCHF there is no much addition. There is addition of long, but there is not much compared to the short position. So the CADCHF is gradually moving to the short side. So it's still adding more short to the net short position, which we may likely see going into next week. So which may also support our other conference when we look at the technical analysis and the fundamental analysis, which supported the oil price going up. So although we are seeing a pullback in oil price, so that won't be for long. So we are expecting price to still reach 100, the crude oil price to reach 100, going into upper week or following week. So you can equally look at the trend line and see it looks like something that is ranging. So here too you can see the daily progress, which is already identified. So going into next week, those are things we will be looking at. So how do we take advantage of this? So how do we take another entry? So for now we are already in a position, so I'm not thinking of taking another entry, but if another opportunity provides itself, I will definitely take it. So how will I take it? Is either I use the 4H or I use the H1. So I don't need to go down to any lower time frame. I can easily identify where I want to take position. If price can give me a pullback from here back to the neckline, I will definitely add to my position and move it down back to where we identify in the areas we identified. Areas we identify on daily. Let me mark that. The 50% Fibonacci and the 61.8%. So those are the targets. So that will give us, okay, let's see how many, what the profit expect to look like. So if it eventually move back to this place, we will be adding to the position, to our previous position. So we'll be looking at this area and also this area. So those are the areas we'll be looking at. Going to next week. So that is our top-down analysis for the week for CADCHF. I will drop the previous video in the comment section so you can go and watch it. Thank you for taking your time to watch my YouTube channel, and God bless you. Thank you.